Welcome. My name's Alon, and if you're watching, I really appreciate you being here. This is my first video, and it's gonna be my first of many. I'm gonna make these once a week, and I'm gonna track my portfolio here on Etoro, which I'm really excited about. How they essentially let you become your own portfolio manager, and people can follow you. This is really exciting to me. Maybe I can apply some of the skills I learned, and I've come up with quite an interesting strategy, and it's a concept I've drawn from actually an old military strategy. I want to quickly go over it here before we go into the portfolio. We have here my little soldiers. So this is us. This is the Zulu people. This was originally invented by Shaka. And here's our opponent. We've got 10 soldiers each, just to explain the military strategy. So you got your head or your chest. These are your best fighters. They're going to confront your enemy head on. Now your horns are going to try flank your enemy. They're fast, they're quick, and we're going to take a little bit of extra risk. Remember, they'll be vulnerable. And then our reserves are going to hang back. They're going to check what's going on with our King Shaka here. And anyone that needs help will be ready to support them at a moment's notice if they're starting to get overwhelmed. We want to keep a little bit on the sidelines to keep us safe. So the strategy is essentially to encircle your enemy, defeat them that way. But when we apply it to investing, our horns are going to take the additional risk. Our chest is going to be that stable return we're going to rely on. There are seasoned fighters. They're going to be ETFs and stuff. And our reserves are going to be liquid. So they're ready. They're ready to go. They're ready to support whenever we need them. And ideally, when the market goes down, they're going to reduce the risk. They're actually going to appreciate. So we want to reduce a bit of risk here in the reserves. So if I open up here, this will show you what's going on. Here in our reserves, we've got corporate bonds. That's 2%. The main thing we've got is all bonds. Think of bonds as just cash, pays you a little bit of interest. But it's just there ready to go whenever we need it. Now I've got Bitcoin here as well. This is a great hedge against inflation. We've got gold and silver. Now the idea is these three things will all appreciate when the market goes down. That's the idea. Let's have a look here. This is a 1-year chart of what we have in our reserves. So remember, our reserves aren't expecting to make a lot of money. Maybe Bitcoin will perform well, but silver and gold, they've done quite well. Let's have a look at a 5-year chart. We're expecting some returns, and then really remember with the bonds, they're just cash. We might even hold cash in the future, but this is just cash ready to support, will pay us a little bit of income. Now if we move over to our chest, so remember this is most of our portfolio, 40%. So we've got 20% in everything else, 40% in our chest, so double. You see we've got the total market, we've got VU, we've got QQQ, large growth. We've got moat, so companies that can protect what they do. We got, Birchstone Hathaway, we got a big one. So these ones are our biggest portion, 6% of the portfolio each. We got VGT, this is a tech ETF. Now a lot of this is the American market. I might revisit this soon if America, looks like it might need to be diversified from. But at the moment, I think America is still the best place to get returns in the stock market. Here we have a semiconductor index. This has been doing quite well. And now we have some of Kathy's ETFs with ARK. We've lowered here. These are essentially all put together almost worth one of these ones at the top here by allocation, keep in mind. But here we have just some different industries I want a bit of exposure to. A little bit interesting. Now let me just quickly show you that. So here we have our ETFs. I've actually drawn a line through it here. As you can see here, this is how it looks like over the past year. Sorry, let me fix it to a year. We have some at 10%, some at 45%. I guess it's been quite a good year. Maybe with all the money printing and everything going on, that could explain a little bit of this. But here we can see we're looking at about 20%. But here we're expecting anywhere from 15, 25, 10%, whatever the market's doing that year. But we're expecting very solid, diversified returns here from our chest. This is the main part of our portfolio. Now the left horn and the right horn are a little bit different. So with this portfolio, the left horn's going to be sort of short-term trading. So we're going to buy and hold things that we think are on the way up, and we want to take profit essentially over an event or a stop loss. So let's say 22% or something like that. I'm going to go into that later. But here with Coinbase, we've got Microsoft, we've got Apple. With Coinbase, I really want to hold it till they really get out of all the legal clarity that's going on that really they don't deserve. I think they're going to win that. It's been actually doing really well at the moment. We've got Microsoft and we've got Apple. I want to show you quickly what these are doing on the chart for the past year. So we got Coinbase, Apple, Microsoft, all doing well. Look at this, 30 to 50% in the past year. We want to hold all of these. I see this trend continuing. Remember guys, the trend is our friend, which is why we're tracking it all like this. We essentially want a 5-year-old to be able to come to the same conclusion as us. So I'll get more into the trading in a moment, but essentially we're going to take profit multiple times a year, and both the horns are essentially aiming for around 80% increase a year. So we're looking for 30-40% in the main portfolio a year. You know, that's our target. We want good growth. This is a growth portfolio. So we actually need to take risks with our horns. So we're going to try and make multiple profitable trades a year here. And here in our right horn, we got Tesla, MicroStrategies, and ETH. So, you know, these two are crypto, and Tesla is quite a trendy company, but it's on the way to do good things. And also we hold a little bit of extra cash and profits in Bitcoin until the rebalance. But essentially what we're going here is for long-term holds. We believe in long-term. We'll quickly have a look at this one. This is what it looks like over the last year. Tesla hasn't done too well, but you can see ETH and MicroStrategies are right in that 80%, 100%, right around that 80% mark we're looking for. If we zoom out though, Tesla historically is a beast, so don't get baited by how it's doing for the past year. This is a gun, this company. And if we go back here, let's have a quick overview now that we've had a look through. Let's filter by our profit. At the moment, Coinbase is definitely our biggest winner. It's up 25%. Bitcoin is doing very, very well. I think it will continue to do well this year. ETH trailing a little bit behind the king. Now, MicroStrategies tends to do a little bit worse than Bitcoin, but I just want a little bit more exposure to Bitcoin without being in Bitcoin directly, because my portfolio has rules, 6% max in one thing, so I don't want to abuse that, but I do want more exposure to the king there. I think you really should consider putting a bit of Bitcoin in your portfolio if you don't. Here we have Tesla, it's doing quite well. The ARK Innovation Finance, wasn't expecting that. That's doing quite well at the moment. We got Apple and Microsoft. They should always be doing well. These are great companies. And here we have a bit of our ETFs. Some of the ARK funds aren't doing well, and surprisingly gold and silver are going down because remember the market is doing good. So that is to be expected. These are going to pop back up when things are doing bad. And here we have our stats, how we're doing at the moment. This month here was quite devastating. I had invested in FRB, one of the banks that actually shut down. Not really shut down, they're still going, but it was pretty much 100-0 loss on essentially, yeah, 4 or 5% portion of our portfolio. That taught me a lesson, you know, and yeah, we're not going to essentially buy things that might turn around. That's not a risk I want to take. I want to follow the trend. The trend is our friend. And that time I didn't follow that, and it was a punishment. So that's essentially a summary of the portfolio, guys. Next week I'm gonna essentially show you what's going on. But the goal is 30 to 40% a year. We're not doing bad. We're doing about 5%. But we want to have a few more good months. The bad months really hurt us. And we want to go from there. Welcome, guys. Appreciate you tuning in.